Hello to everybody out there in the financial advisor group world. It is mid-July, super hot, and also rainstorms off and on all the time. But welcome to a new updated edition. This won't be rapid fire, but if you see, we have a special guest with us today, Mary Winand,
Hello.
who's the head of our planning department, a partner here at the firm. And we welcome her back, as if many of you probably know or didn't know. She had a baby boy. How long ago now, Mary?
Almost 5 months ago.
Almost five,
Yeah,
and
he'll
she
be five
looks,
months in a couple weeks.
and his name's Leon. He's doing great. Mary looks great.
hmm
You can see motherhood's treating her well. So welcome back, Mary.
Thank you.
Uh,
Glad to be back.
and we'll throw her right into the topic today is going to be this, we'll call it the big bill, whatever word we want to call it to describe it. We struggle to come up with a word for it. But we figure it's a great opportunity to get some information from Mary on sort of, we all have the question of what impact does this have on us? So Mary, if you don't mind, I'll start bombing away with questions at you.
Fire away. Yeah.
So I guess the first thing is right for someone who's working and just a normal person, this whole bill, is this going to change much from a taxation standpoint?
Not really, to answer directly. So this is basically an extension of the tax cuts that were put in place in 2017. So
Hmm.
during the first Trump administration, he passed the Tax Cut and Jobs Act of 2017. So at that point, there was a pretty massive overhaul with tax brackets, deductions, the exemptions went away, and that act was set to expire at the end of this year. So what this bill does is it just extends it permanently. So there's really going to be no change to the tax brackets. They've been effective since 2017. It's
Hmm.
just now extending them.
Okay. Well, I mean, it's interesting and sort of makes it simple. So the same situation as last year, but no big cut in
hmm
general. The next big question we can continue to get, which is the whole Social Security thing. So I'm
Yeah,
curious about this one. So does this mean my Social Security is not taxable anymore?
it's still taxable. Yep. So no changes to Social Security. There's a lot of confusion around the additional senior deduction that was implemented through this bill, but it's not specifically targeting Social Security income.
Hmm.
What it is doing is it's increasing the standard deduction for those over the age of 65. So right now, basically any American, and I'll focus on married filing jointly just because that's to keep the math simple.
Gotcha.
Um, in 2025, a married filing jointly couple, any age, receives a $30,000 standard deduction. If you're over the age of 65, there was already a 3,000 additional deduction that you received. Now, with this additional senior deduction that's put into place from 2025 until the end of 2028, there's an additional 12,000 of standard
Oh,
deduction, and that's dependent upon your income. So if your income exceeds a certain threshold, that actually wouldn't be the case. But for most people, if you're over the age of 65, you married filing jointly, your standard deduction goes from 3,000 all the way up to 45,000. So it does in a way reduce your income, but it's not specifically targeting your Social Security income. The taxation of your Social Security income is remaining consistent,
hmm.
but your taxable income will be reduced through the increased standard deduction.
So a good thing, right? A win, because right, if I
Yeah,
have Social Security coming in, I'm paying less on it. But really interesting that the tax on the Social Security didn't change at all. There's just
no.
more, we get to deduct more of it in theory. And
hmm
the weird part is it ends in 2028.
It
So
does, yes. So there's a few permanent laws, which the next administration could just change those, but they're permanent. And then there's a few temporary for tax years 25, 26, 27, and 2028.
okay.
And with Social Security, if you're a recipient, you could be a recipient of Social Security as early as 62. And this additional senior deduction makes no impact on you. It's strictly for those over the age of 65.
I guess that leads another question. So I'm over 65 and I'm not taking Social Security. Can I still take the deduction?
You can. Yep. As long as
Okay.
your income is below the threshold, you can still take the deduction.
Okay. Interesting. Yeah, so then I guess that leads into the other questions, which I'll throw them in together. The taxation on Social Security, again, we went through that. How about no taxes on tips or overtime?
So those are two separate reductions, also both temporary and
Hmm.
from 2025 through 2028. They're very similar in the way they're written. I'll touch on the tips first. So it's not all of your tips. So it is just up to $25,000 per taxpayer. So if you earn, let's say, 50,000 in tips for this year, only 25,000 of them will be excluded from your taxable income. So there is a cap on that. And that's also depending on your income, you might not get that benefit. And that is just federal taxes. So if you run your tips through payroll, you'll still be subject to the FICA, the normal payroll taxes. If you have in Pennsylvania, state income tax, the local taxes. So that is strictly just a federal tax on tips. Your income is reduced by $25,000 per taxpayer. And then the overtime is similar. So with overtime, not all of your overtime is tax-free. If you have overtime up to $12,500 per taxpayer, that is then tax-free. And this gets really confusing. It is just the portion that is exclusively overtime. So if you work for a company that says, hey, you can work overtime, but we're only going to pay you your normal rate, there's actually no exclusion. But if you work for a company that says you can work overtime, but we'll pay you time and a half, double time, triple time, whatever the case is, the exclusion is just on that portion that is actually the overtime portion. And again, it's just up to $12,500. Anything over and above that amount would be fully taxable federally.
So, and that one again, both of those end in 2000 at the end of 2028?
Yes. Yep. So as of now, they're temporary tax year starting this year, even though the tax bill just went into effect on July 4th. Basically assume that we started this year with that law in effect, starting this year through the end of 2028.
This sounds like it makes your job a lot of fun. It's changing all the time, different rules, different codes, very simple tax structure that we continue to have.
That's right.
So thank you for that stuff. And the other part, there's a couple other parts that I guess we hear questions on is how about the estate tax, right? The federal estate tax side of this. I heard there was a change in there around that as well.
Yep. So the change is that there's really no change. Similar to the tax brackets that we talked on first, there was the estate tax exemption through the 2017 bill that was passed that increased those significantly. So now those limits are now just permanent. So for 2025, the exemption, if you're married filing jointly and pass away, there's $30 million of federal exemption that you can pass to your heirs tax-free from a federal standpoint. And that is now indexed for inflation. So every year we would have to reevaluate what that number is. But basically the law that was put into place in 2017 that touched on the estate tax exemption is now permanent.
So it's a good problem if I'm worrying about that one, right? So unless I'm married with over $30 million, I don't need to worry about that part.
Nope.
And I think you did some digging. What was the statistic of what percentage of people actually pay federal? Again, this is federal, not state.
Yeah.
Federal estate tax.
So in 2023, it was 0.25% of people that died in 2023 paid the federal estate tax. So not even 1% of people pay it.
Maybe I'll make that one of my future goals, is I hope I do pay the federal estate tax, right? It's a weird goal to have, but hey, for all our clients, we hope it's a problem you have to deal with, right?
Yep.
Well, thank you for that. And I guess as we're sort of go through that, I think those are probably the most important. I've heard some things, about deducting car interest. Is that as simple as that? You get to deduct car interest now?
No, like everything else, there's limitations and it might not be applicable to you. But yes, that is something that some people can take advantage of. That's also temporary from 2025 to 2028. And it's up to a $10,000 deduction for auto interest on a loan. So, and there is a weight limit to the vehicle. It has to be for personal use. The final assembly has to take place in the US. So there's a bunch of restrictions around it that I would just check with your CPA if it's something that is applicable to you. But you can run your vehicle's VIN number through a database to see if it's something that applies to you.
Yeah, I think all these things make CPAs' jobs more steady, right? Like just ask your CPA. Although we can help, right? That's part of our goal is to help on that front as well. I guess the last like big item that we've heard is some little change around the Affordable Care Act and people who are on, in Pennsylvania, it's penny,
Yep.
but the Affordable Care Act with sort of how you qualify for that.
Yep. With the Affordable Care Act, it's your health insurance, the cost of your health premiums is dictated by your income. And over the last couple of years, it was actually put into place through an act during COVID. There
Hmm.
was a ton of flexibility with the income. So you could have a certain level of income and you still qualified for a subsidy through the Affordable Care Act. Effective in 2026 and beyond, it's basically a cliff. If your income exceeds a certain threshold, it's 400 times the poverty limit.
Okay.
If your income exceeds that threshold, you're either in or out. You can
Hmm.
either get the subsidy or you don't get the subsidy. So, for those that we work with, this is something that we've planned on happening. We weren't sure if it was going to. This makes it concrete that starting in 2026, it's going to be a little bit more difficult from an income standpoint to get those healthcare subsidies. And they're implementing a few things as far as paperwork goes. The enrollment process is a little trickier. So there's going to be, as a whole, just a little bit harder to take advantage of that program, the Affordable Care Act.
Okay. And I guess that is a little segue into, right, that's what we want our clients to do, right, is use us as a resource for this stuff. Is
Mm-hmm.
that, we'll educate you, we'll provide videos like this to say, hey, here's some detail. But part of our role, right, Mary, in that situation, which, it's we'll walk you through. You don't need to worry about the detail. Let us sort of figure out that
Yep.
side of it.
Mm-hmm.
But it's important to educate and sort of understand that because I think around this bill, especially, there's just a lot of unknown uncertainty, uh,
Definitely.
whatever people things believe that aren't really the factual part of what the bill says.
Yeah.
Um,
Yep. The messaging seems to be there's not clarity around all of the topics, definitely.
that's a great way to word it. I guess before we move on and sort of close the video, are there any things that you think that I haven't asked that you think could impact clients or anybody that
Yeah.
we'd be talking to?
Yep, a few things as a new mom. Now that I have a child, these things stood out to me. For those of you who are taking advantage of the child tax credit, that is increased. So that's a positive there. And then there is also a charitable deduction. And that gets a little tricky, but if you don't itemize, there is now the ability in some circumstances to get a small deduction for some of the charitable giving. So
Okay.
those are the two big things. That I would kind of just, other than the things we covered, that are
Okay.
worth noting.
Excellent. And I guess I think on the charitable deduction part, again, I guess when we were looking at this, what the statistic was of how many people use the standard deduction now with all this stuff going on. Do you remember what that percent was?
Oh, yes, it was 90% of Americans now use the standard deduction.
Wow.
So only 10% of them itemized. So there were a few other changes to the itemized deductions, one of them being the increase to the state and local tax.
Yep.
Which really, of that 10%, it probably impacts 5% of that 10%. So it's a
Yep.
very small amount of Americans that is impacting. But that's another change with the itemized deductions is the state and local tax deduction is increased from 10,000 up to 40,000.
Excellent. Well, this was very helpful. Again, I think it's great to have a resource like Mary back here in the office. I think we should have thought this through more because if we would have teased in the beginning, we were going to show a picture of Leon at the end. I think people would have
Yeah,
watched the whole way through.
yeah.
We should have done that. But Mary, thank you for your time. Thank you for going through the video with us, sort of walking us through. And for those of you that haven't worked with Mary, this is her alley, right? She is the head of our planning department. This is what we rely on her for is things like this. So appreciate Mary taking the time on the video.
Mhm.
Um, Huge congratulations as a new mom and to Leon.
Thank you so
And
much.
just to mention quickly, and I know Mary and I were talking about this beforehand, is any impact this would have from an investing
Yes,
perspective? And
I
I'll
was
make that.
gonna actually ask you, once you wrapped up your spiel, I was gonna throw it back to you and ask you that question.
So it's basically no impact, right? To make this simple, like very little impact at all. From as I heard someone that I was listening to recently about what's the impact of this, that this is blah, right? From an investment perspective, it really doesn't change much of anything. Um, so yeah, sorry to jump in front of you there, but I was about ready to wrap up and that came through my head.
Yep.
Um, so anything else, Mary? Anything else you want to add?
I don't think so. I'm just happy to be back. I'm happy to be a part of this video, and I'm here to help.
Excellent. So thank you, Mary, again. Appreciate all of you for tuning in and paying attention to our videos. As always, if you have questions, concerns, that's what we're here for. The point of this isn't to make you experts, but to understand we're staying on top of this and give you a little bit of inkling of knowledge of sort of what we're looking into. As always, thank you for the trust and confidence you place in us over and over again. Hope great summer for everyone ahead. Hopefully this humidity leaves at some point, maybe.
Yeah.
And the rain stops to give us some time out. But best of luck to everyone the rest of the summer. We look forward to seeing you here in the office or talking to you sometime soon.